Welcome to Turn Down for What, your source for EV news and updates. Like and subscribe on YouTube for more content like this episode. Let's dive on in. Welcome back to Turn Down for What. Another day, another
Now
episode.
do that different.
Welcome back. Okay, well, last week we had a very riveting discussion around the
Yeah.
Tesla announcements. Was obviously a high controversial point as far as just the chaos around the point, and there's not really been any clarity in the last week since we've posted that episode. And a lot of people, I think, have um, had a lot of opinions, but there's not been anything new to share in that point. So I mean, that's just a topic that we will continue to follow, and something that's obviously just kind of crazy. Jesse and I have spent some time brainstorming around that for what that means for the charging industry as a whole, and there's a lot of FUD that just has come up around it, just saying the charging industry's dead and all of these things. And really, Jesse and I see it as nothing but opportunity, with just the outscape of the funding that's coming, the opportunity with charging needs that still exist, and whether Tesla chooses to revamp and change up their plan and jump back in the game, or if they don't, there's still that infrastructure needed that is going to be an essential part of taking care of the EV drivers that are currently on the road and that will continue to get on the road. And so that's something that obviously we'll keep in touch with and see kind of how all that progresses. But today we wanted to go back. Last week we intended to talk about this, but the conversation with Lauren around the Tesla announcement went a little bit long. But Chris, give us a breakdown of the Ford earnings call, and maybe a little highlight on the Lucid as well, if you dug into that one.
Yeah, the Ford one came out about a week ago and released their Q1 earnings, and it was very similar to Q4, where they had really great profits when it came to the Ford Pro area, and the software side all looked great, and it was the real weight on it was of course the EV side of things, and so that was as we saw again with Q4, it was a very similar circumstance where um, the electric vehicle side is just not turning a profit. And they know that. They know that that's something that they're having to fix going into the next gen. And I think that's part of why it was delayed, and why they're pushing on that. And they spoke to that on the earnings call as well. And I think what I saw that was interesting is they had a graph that came up, and maybe we can insert it here real quick. And you can see on the graph that when it came to wholesale units sold, it was almost zero compared to other quarters. And I'm assuming and kind of speculating, I've tried to confirm this, but haven't been able to, that is the deliveries to dealerships. And so if you think of the end of Q4 and Q1, all the dealers were trying to get rid of all that 23 inventory. They were doing huge incentives and markdowns and trying to move all those units because they had huge numbers with Mach-E and Lightning sales from the dealer to the customer, but none of it seemed to reflect on the earnings. So they had, over $1 billion in losses again. And if you look at their wholesale deliveries, it was nothing. And so I'm speculating that that's why, because they didn't deliver any of the 24s. They are just now starting to get 24 models out to the dealers. And then, of course, that ramps a whole crazy, FUD thing out there of, well, they lose 160,000 for every Lightning sold. And I just think it's so much deeper than that. I think people just see that surface level, $1 billion a quarter loss. They talked about their untotal, I think it's going to be $8 billion over the course of a couple years that they're going to have a financial hit for the development of the EV program. But a lot goes into that. It's not as simple as saying they're losing 130,000 for every vehicle, because it's not just the cost of the vehicle. It's the Rouge plant. It's the Blue Oval City down in Tennessee where you guys are. It's the battery plants they've got 2 or 3 of that they're building out. It's the team in Detroit. It's that they mentioned the Skunk Works team, and that they have the hardware side of that in Irvine. I've personally been to the software side of things in Palo Alto, to their labs up here in the Bay Area. So there's whole buildings and teams and facilities and R&D and stuff being done for T3. And Jim Farley mentioned the more affordable vehicle that's going to compete. All of that developmental cost, right? All that engineering, that's all in that billions of dollars that they're doing. People don't think about that. And look, Tesla, Lucid, Rivian, they all did the same thing. It's just that they are either currently or in the past lost all that billions of dollars of investor capital. And Ford is using their ICE profits to pay for this development. And the big thing there is also then if you're using profits to fund this initiative, that's less of a tax liability. So you're getting some of that back in that form as well. And there were a couple clips from the earnings call that we can put in here and share and kind of just everybody give a listen to them because I thought they were really powerful. Kind of give a listen to these clips right here.
Let me clarify a few things, Adam, on that. Is that it's not an option for us not to be compliant. If you don't comply with your ZEV or your greenhouse gas emissions requirements, you can't pay fines. What happens is you can't sell, and that's consistent across the industry. So that's for all OEMs. All OEMs are under those rules. And so there's really three levers that we have. We can sell EVs and hybrids, we can sell fewer ICE, or we can contract to buy credits from another OEM. And when we do contract to buy credits, we will disclose that as we did in our 10K at the end of the year. And so those are the three levers. And we, I would say, monthly, if not weekly, are working to optimize across those three levers to drive the highest profitability and the highest cash flow for the company. So to continue to sell the ICE vehicles, we are going to need to sell EVs, and we're going to optimize across the profitability. Now, the most important thing, as Jim said, is we need to get the EV business to stand on its own, to be profitable and return on the capital we've invested, and then all the levers will be accretive to Ford, and we'll be able to make it really positive. So that's what we're focused on, and that's what I intended to communicate earlier today.
I think the most important thing strategically is to get to new chemistries that have a lot less expensive materials in them. And we see that right around the corner at Ford. And we're changing our launch timing to take advantage of that.
All right. So I think there's real big takeaways there. One is clearly they mention that EVs are a part of the future and they have to sell EVs. And I think one of the big takeaways kind of from those clips when they're talking to investors is the recognition that two things. Ford mentioned this also in Q4. For every Lightning sold, they can sell 14 highly profitable gas F-150s. And if you look at how many F-150s they sold last year, it was somewhere in the ballpark of 580-something thousand F-150s. And if you look at that math, right, if you do 580,000-ish divide that by 14, how many Lightnings do you need to sell to offset that? It turns out to be about 40,000. And if you look at their guidance on what they're hoping to produce and how they brought it back, to one shift from 3, it's in the ballpark of 40,000. And if they can be in that area, that's going to basically offset what they need to do for their ICE F-150s. Now, can they actually move 40,000 Lightnings in a year? I think that's a question mark. They haven't done it in the past. But they also mentioned on the call that they spent $700 million in buying credit offsets, carbon credit offsets. And they say that, look, you either have to produce EVs or you have to buy these carbon credits. There's no other way to be in business as a manufacturer, and everybody has to do it. And in fact, Tesla, I always point this out, that Tesla's very first moments of profitability came not from selling their EVs, but from selling their carbon credits. And so early on, that's where their profit came from. And people forget that. They forget how long it took Tesla to turn a profit. So that was my big takeaway, right? Is that, look, they're going to keep developing EVs. They also really admitted that the current models have no path to profitability as they stand today. And so in that second clip, they talked about they're really kind of delaying a little bit the launch of the next gen products until two things occur. One, they have to hit profitability within 12 months of release. These new factories are going to help them do that, but importantly, emerging battery technology. And they didn't get into specifics on what that meant, but I'm imagining that the current battery technology, the cost of it, the density of it, the efficiency of it is not where it needs to be to hit profitability. And if they rolled out a whole bunch of equipment on today's technology, they're not setting them up for success in the future. And you've invested all that capital. But if you wait another year or so, it sounds like something is emerging. That's the technology they want in place. That's what they need to be using. And I know that is they've committed that the next generation has to be profitable. So I think they're spending a lot of developmental money now, setting up these factories. They're waiting for this emerging battery technology. Then they're going to launch, the T3 and the third row SUV, EV, and the more affordable midsize, whatever that looks like. So that's what I heard. That's what I'm thinking. I mean, I'd love to hear what you guys think about that, but that's kind of what I took away from the call.
Well, I'm going to go right into the first part of it when you talk about how the tax credit, or I'm sorry, how the profit of the F-150i is paying for today's developments. Now, that is part of the picture, but also what people don't realize is under the Inflation Reduction Act, there's a lot of credits that go into manufacturing of batteries. There's a lot of credits that come back, and we won't see those hit Ford until they start doing that and until they start having these production plants. And when that happens, not only is that going to go against these prices, that's a credit that they could sell for the next 10 years. So as they make their batteries, I'm sure the equipment that they're spending now, which is, $5 billion, I think is what Tennessee is, that equipment cost, I think some of that would also go into these incentives that's been provided under that in Inflation Reduction Act to allow these companies to tool for the next generation of EV vehicles. So not only are you getting the cost, and again, this is, I think me and you talked about this not too long ago, is there losses also including the plants? And I believe it is. I think that as they do that, so what happens once you get the plant built and you don't have those losses? Not only that, you are getting the credits for producing the batteries in-house. Now, all of a sudden, you can make a profitable vehicle, whether it's today's Lightning or whether you're somebody that says, look, I don't want an EV, but I would like to have something that if I could get 50 miles at my house and then it's a traditional gas vehicle. Well, you've just told us you want a plug-in hybrid, which still needs batteries, which still needs this infrastructure. So, regardless of where you sit on the fence, whether it's all a gas engine or some technology or all electric, what Ford is doing is laying the foundations to have a much profitable company in the next 2 or 3 years. And I think that, again, because they chose Tennessee, I'm very proud of our ability to have them here, and I'm very proud to have Ford as part of Tennessee. And I'm excited. I think they're going to come out of this really lean and doing extremely well. And it's every car company. We have a General Motors has their battery plant here in Tennessee, so it's not that that Ford is the only one that's doing this. I just see them doing it in a way that is setting them up, I feel like, for much more success than everybody else. And what happens if they can get that Ford Focus or a Festiva body that can go 260, 280 mile range under $20,000, $25,000? They know how to make these small hot hatches. And what would happen if that came to the market today? It would dominate, I feel like. So I'm excited to see what happens.
Yeah, I think a big part of it is supply chain. And I think that Ford is doing a lot of investing into the space, knowing the future and where it lies. And yes, they've scaled back their optimistic hopes and dreams on the immediate outlay of that space, and yet they're still moving forward with a $5 billion development opening up. On their end, I think it's a total of 7, but with their capital will be $5 billion of outlay in Tennessee, in the Blue Oval facility. And by them working on the manufacturing of their battery solutions, by them working on putting those things into place, like Jesse's saying, I think that they're opening themselves up for, one, generating tax credits to help make these sites, these vehicles individually more profitable. But two, they have the ability with the tax credits, the profitability, but two, they have the ability to in-house the mechanisms to increase the quantity that can be supplied and the profitability of each one, not on tax credits alone, but just on the fact that they're doing the work themselves. And so, yes, the news of, hey, Ford's losing $120,000 a vehicle, it's not possible. The vehicle itself, that's not the truth. People, I've seen a lot of people that are anti-EV posting all over social media. Look, the EVs, haha, look, they're losing so much money. And it's like, no, you're looking at a very smart business investing billions of dollars into this. And yes, your financial report isn't going to show your gain today. But like Jesse's saying, I think 3 years from now, the outlay on EVs is going to be totally different for a corporation like Ford because of the investing that they've done. And the important thing to note is they are still operating out of a overall, I mean, obviously with their amount of ICE sales, they're operating out of an overall gain of $1 billion plus. I mean, I don't remember what the exact number was, but they're still operating at a very large margin in the for positive in their overall sales, and they're just taking some of the gains and reinvesting it into this program that they feel like is the future of the industry, and scaling it back and being smart about that investment I don't think is a issue at all. But yeah, Q1 revenue up 3%, $42.8 billion. A lot of revenue. And yes, you are investing into the program that's Model E that lost 1.3 billion. Yes, but you're building a $5 billion facility and you're doing lots of investments and dealing with lots of additional things to improve the supply chain to make it to where in the future your overall revenue increases. So
And I think they're fundamentally different in a couple ways from Tesla too. And it's interesting with the recent news of how Tesla has reacted, and what that earnings call looked like compared to what the Ford earnings call looked like. And I've seen some of the same stuff you saw, Josh, where it's out there. Look how much money they lost for each of these vehicles. And I know it's not apples to apples, but look, that would be like saying when I spent $40,000 on my solar system and Powerwall, that year one, year two into it, oh, look, he's lost $35,000 because the electricity was only 2 or 3 grand a year. But now fast forward to 7 years later, with inflation and gas prices and everything, at the end of this year, at the end of this calendar year, I will be break even. And for the next 20 years, I will be free energy. But for the last 5, 6 years, everybody could be out there. Look, what an idiot. He spent, $40,000, and for every time he clicked on the TV, it cost him, $3,000.
I was trying to think of an analogy. I was trying to think of an analogy, and you did a spectacular job at hammering my point home. Thank you, Chris.
Yeah. So I've seen some of the same things. And it's hard to get people to understand these things, and I wish people understood and were taught in school how these things work. And I certainly am no genius at it, but I know just enough to be dangerous. And that's, so I just try to kind of share those thoughts. But the other fundamental difference is you see that when the margins went down for Tesla, because it's been a growth stock for years and years and years and multiples of growth when it comes to the stock valuation, they freak out, right? And they're like, lay off all these people, and we aren't even in a car company, guys. We're not a car company. We're not an energy company. Those things are boring. We're an AI company. We're a robotics and automation company. And because they want to keep having that perception of a growth stock, of growth business, and maybe that's what they are. Maybe that's not what they are. Maybe they're going to evolve and change, and there's going to be a ton of growth in that too. But Ford is fundamentally different. It's a value stock. It's not a growth stock. If you look at the last 5, 6 years of Ford, it's been pretty much flat. Where people are investing in Ford is their dividends. And so they've increased dividends to those investors. Again, they've committed to sending back half of their free cash flow back to investors. And in fact, in this earnings call, not only did they increase dividends recently, but they are giving back a special dividend. And so all of that's going to come back to these, especially, as a retail investor. I have some Ford because I believe in the company. Full disclosure, I also have stock in Tesla, Rivian, and Lucid because I'm a fan of it. It's not serious money. It's small amounts so that I can vote, right?
Not Fisker? No money in Fisker?
No
As long
Fisker,
as you
no
didn't put
Fisker.
investment in Tritium and Fisker, yeah.
No Tritium, no Fisker. Rest in peace to those guys. Free Wire, not to get off topic, right here in the Bay Area. Free Wire, just unfortunately. Yeah, they're right around the corner, right by Lucid here in Newark. So where I'm at. So yeah, those are tough things, and so yeah, they're fundamentally different. I get those dividends and I reinvest them into more stock. But if you're a huge investor, if you're not a retail investor, if you're a high level investor, they're making a lot of money. Pension funds, all of these big funds make a lot of money that way. It's a totally different stock for a totally different reason and totally different investor.
And let me put something in perspective that we talked about Fisker and Tritium and I can't remember that other company's name, FreeWire. Yeah, we spoke with FreeWire one time. I like their product. All three of those companies have one thing in common. They have one thing. It's only electric cars. You
Yep.
know, they don't make switches, they don't make backup systems, they don't make data center products. You know, when you start looking at the large companies in the charging space that are doing really well, you know, you have somebody like Lincoln. You know, we talked to Lincoln. I like Lincoln for their charging systems. We're trying to work out a deal with them. You know, they make welders for a living, so they don't have to depend on just one part of the market being strong. Same way with, ABB. ABB makes products for everything that's electronic. They are a monster company. So this is a small division of theirs. So they have that ability to take the highs with the lows. And I think that's where Ford is. Ford makes ICE vehicles. And surprisingly, I think that the hybrid and plug-in hybrid will be in a space to where Ford can then start taking their own batteries and putting that into those divisions. So I only see this as being a fundamental block that now can support so many other parts of its divisions, but they are at heart always been a technological advanced ICE vehicle company that makes really cool vehicles, that makes the Mustang, that, you know, their investment into the V8 to continue that along has been fantastic with that 5.0 they have now. You know, Dodge is one of those that has their next company, you know, their next vehicle is a 6-cylinder. Now, I have nothing against turbo 6-cylinders. They have more power than the other one, but it doesn't sound like that V8, does it? And that's the thing. Ford is trying to take both sides of this. And by making that V8, they're going to have to make more carbon credits to offset it. And what they're doing now by their own batteries and their own systems are going to give them the credits to keep that V8 alive longer. And as long as they keep doing stuff like that, you know, I think that they are more innovative and have more of a opportunity for success, even though they're not like a Tesla who, you know, is wildly popular. And I think their value is like $500 million or more versus Ford is around the 50-60 billion mark, you know, similar to General Motors. I think they're right neck and neck. And then you have a juggernaut like Toyota's and in the hundreds of millions for their value, hundreds of billions, I'm sorry. So their Tesla's way up ahead of everybody because of these other things. But I think that's where Ford as a car company is probably the best suited to keep continuing on with the likes of Toyota and some of these others. So, you know, I would be concerned that companies, and somebody mentioned the other day about, you know, what happens when Mitsubishi can't make an EV that will allow them to be in the 13 or 14 states that require an X amount that has to be made EV. They might just say, look, we're not going to offer a car to that state, gas or electric, because they can't meet the requirements. Whereas Ford, Chevy, Dodge, you know, some of the bigger juggernauts can. And, you know, I hate that because it cuts out competition, but it also makes me realize that I think Ford has positioned themselves very well, even if the EV space is not necessarily growing in the direction it goes. And it could be just I'm a fanboy for Ford and I'm a fanboy for the electric movement right now, but I do feel like from the outside looking in that they're positioning themselves better than anybody else.
I think when you're dealing with
That's
emerging,
that's my
yeah,
part.
I think to back up your point, I think when you're dealing with emerging technologies, it's something that there has to be a lot of strategy, and a lot of people have wanted to get into this space with unique and cool technology. But the statistic is over 50% of businesses that take on an emerging technology fail. And the reality is those that are successful can work if that is your exclusive. Rivian, Lucid are proof that you can do it. But the ones that you have seen fail in these emerging technologies, I'm labeling all of EV as an emerging technology. Tritium only sold chargers. Fisker only sold EVs. And you're dealing with industry. FreeWire only sold chargers that were a niche, expensive product. And you're dealing with specific users with only a specific product. And the people that are much more future proof, like Jesse is saying, is the Lincoln who doesn't need to sell a charger, but they have a charger to add to their profit line. And the Ford who doesn't need to sell an EV, but the EV investments help make their main business more profitable and gives them an edge on the emerging technology. Because if that emerging technology in 10 years really balloons, they've strategically positioned themselves. But it's one of those things. If you enter into the space as a unique identifier, you have to have versatility, because being all in on one aspect of an emerging technology is a huge risk as an investor. We're dealing with, some solar and some other aspects that, like, it's, once again, clean energy as a whole is an emerging technology, and you have to really study that, because not everybody can be profitable with solar installations. Not everybody can be profitable with solar farms and with clean energy generation and with EV chargers and with these other technologies that are coming out. But in the EV space, we're seeing Ford doing the investments. Tesla ballooned, not only based on car sales, which they've done very well at, but they did very well with charging station and with all of the other technologies and
Solar.
data tracking and everything else that they've incorporated. But they kind of established themselves as an early leader in that space and have maintained that. But everybody else trying to play the catch-up game has had hairy moments, because if you're all in on one part of that technology, you're putting yourself at a huge risk. And so I think the big OEMs like Ford, like Toyota, like GM, they're going to be fine. They're not going to bankrupt themselves over an EV push. They are capitalizing in the background. They're smart business people. They're not just willy-nilly spending $5 billion of valuation on a whim. They know what they're doing. They're taking calculated investments into these spaces, knowing that the carbon credit generation, the manufacturing credit generation will offset some bottom line of their ICE production to make that even more profitable. But then, as a leader in the emerging technology space, as this industry continues to ramp up, 5 years from now, they're going to already have all of the infrastructure in place to scale up their productions to really take over that industry once that hits.
Yeah, and I think you kind of mentioned it with those that are successful. Hyundai, Kia, they have a mix of electric and traditional gas. And BYD, huge, right, in China. They have BYD buses, they have BYD gas vehicles, they have BYD electric. And so really Tesla's the odd one there that just really nailed it and crushed it. And they're so far ahead, and they're kind of bringing everybody with them, and everybody's trying to catch up. But Ford fundamentally is well positioned because it's got a mix, and they're doing incredibly well with hybrid. Look, mea culpa, man. I thought Toyota wasn't getting it. Turns out Toyota was right. We talked on here, I don't know how much long ago, where we thought Toyota just was going to get left behind and they were in trouble. And it turns out they were right this whole time. These people do have smart folks, obviously smarter than me, because I thought for sure Toyota wasn't understanding. But no, they're doing what they need to do. And
And they're
Tesla.
emerging. I think that they're emerging. I think that they're going to come up onto the scene, but they've really mastered hybrid. They've got plug-in hybrid. And I think that they're going to launch an EV space that's really going to be strategic. And they're not in the early runnings for EV, the current EV market, but I think that their intention is to enter that market at a more strategic time.
And I think they'll crush
Honestly,
it when
I think
do.
they have, I think they have something up their sleeve, because that being the juggernaut of the automotive industry, they're going to have the ability to come up with something special. They've been in that market for, I don't know how many years have they perfected with the little Toyota that they had, the hybrid.
Oh, the Prius. The Prius.
Yeah, the
Yeah,
Prius.
yeah.
Couldn't think about it right off the top of my head. So they've had
My brother
that
just
for a
got
while.
a brand new. My brother just got a brand new Prius.
The refresh looks nice.
Looks great.
Yeah, they look
it looks,
good. Yeah,
it looks great. It was under $30,000. It was his old Prius that he had went 180,000 miles. And there was a report recently that came out and said the most green vehicle you can buy is the Prius. When you go all in, right? He had a trip where he got 70 miles to the gallon on a, right?
That's
and
crazy.
yeah, and and I think that there's fundamentally different approaches. Honda, for example, recently Honda Acura had their Acura come out, and it's made by GM. It's essentially the Cadillac Lyric body, or not body, but the skateboard from the Cadillac Lyric. And then Acura put their stuff on top of it, but it's got like OnStar, and it's got all the Android Automotive kind of interface, and they haven't dipped their toe into it at all. And then on the other extreme, you've got, you were talking about Rivian and Lucid. That's the risk for them, right? Is that they don't have anything to offset. So Rivian is banking on, they've got the Amazon support. They all have to have something extra, right? They've got Amazon support, and there's whispers recently, no real news about Apple potentially doing something
I
with
saw
Rivian.
that. Yeah.
Yeah, so those that's
Yeah.
what's going to help them. And then Lucid, Lucid just released their earnings. They had more deliveries than production, which is okay because on the last quarter they had more production than deliveries, so they had that inventory. They reduced their price under $80,000. They got aggressive just like Ford did, and they had a record number of deliveries this past quarter, over 3,000, which I know doesn't sound like a big number, but for them it's good to see it growing. But their losses also grew. But again, they're investing in ramping up for the Gravity, and it's and they've got backers too, right? They've got the Saudi investment fund that has committed in the long term, so they see the value there. Each That's what's different from Fisker, right? Fisker didn't have their own factory. Someone else was building their product for them, and they had really no IP, right? Like, what are you getting if you try to buy out Fisker? It's someone else doing the manufacturing. All you've got is the brand name, maybe the design aesthetic, but everything else was outsourced. So,
What was the brand
I,
that what was that one brand?
I can't. The one that built them.
Oh,
I can't. Yeah, I'm drawing a blank on what they are too. Magna. I
can't
think it's
help you on
Magna.
that one.
Isn't it
Yeah.
Magna?
I
I think
think
it's
It is
so.
Magna.
Magna. Magna
Yeah.
does, yeah, it's Magna. Yeah. Well, and then also when you're talking about Honda, I mean, 2 weeks ago they announced that in Canada they were doing a what, $15 billion plant in Canada. So, a supply chain there. So does that mean that for the next, if it takes them 5 years to build it, are they going to have, talking about how many billions they've lost because they're building that plant? Probably. But at the same time, that's an investment for future development. And, that helps us too when Josh and I sit down and say, okay, are we going to go after this state or that state? If, for example, Las Vegas coming up, I don't think it's hit yet. Are we going to try to get 3 or 4 locations there and bid on or apply for charging stations there? We know that hockey stick, regardless, is still going to go up. We know there will always be new EVs from here on out. Somehow will be sold. The question is, what is the oversaturation point? And right now we see that opportunity, especially with Tesla saying, hey, we're going to bow out for a little bit. We're going to focus on making our existing sites better. We're going to focus on things like that because they were number one in the United States for winning these sites because they were upgrading and adding to existing sites. So, they were one of the lowest prices because of that too. But in Tennessee, one of the sites that they had there, I think, was over $900,000 for the ask. So there's going to be some locations that they are putting their infrastructure in and that we might be able to benefit from. So we're fine with that, and we'll go from there.
Have you heard updates? How does that, like, nobody's communicating from Tesla, right? And so it's the
That's
kind
it.
of the general
Nobody's
thing.
communicating from Tesla. Nobody knows what's going to happen.
Yeah, we
so
don't
it's
know.
They,
we
they
have
seem,
no clue. We know that there is a location in Tennessee that they won. We don't know where we stand with it, but we know we also applied for that location. Well, obviously, we didn't win it, or they wouldn't be going forward with it. But what happens if contract time comes and they don't ask, or they can't communicate? Well, that means that maybe we get it. We have no idea. We are a backup on locations that we know of in one that we won. So, that might be an opportunity for us on that one. But that's because the contract has not been issued yet. What happens for these states that have already issued contracts? We do know that Tesla was one of 4 of the short list for, and I can't remember what state it was,
Was
or
it New Hampshire?
or it was a I think it was something like that. It was a
Vermont,
there
New
were
Hampshire,
8.
one of those Northeast
Yeah.
states.
Yeah, not Vermont, because we're working on that one right now. But yeah, they were on the short list of the final 4 that would get the ability to then bid on sites. Well, if they're not going to bid on those sites, that just leaves those 3. So does that mean they take somebody that has not been awarded in that and let them have it? I don't know. It's hectic. We've went back and forth on what our thoughts were and what our theories are, and everybody has their own theory. I think that it will eventually come out what the motive behind it is, and I can't even guess because I don't want to guess, just because I'm not knowledgeable enough on their systems to say what the reason behind it was. I'm just happy because Josh and I feel like it's an opportunity for us to have more locations. And honestly, we are going to provide CCS. We're going to provide NACS at our sites without adapters. We are going to provide higher charging rates than what the Tesla system does if the vehicle can accept it. We are going to provide more amenities at our locations, we feel like, than what one of their systems are. So I think we're going to be fine.
I'm looking forward to that and seeing kind of what all shakes out. It's hard to be patient with these things. We all want information now, like what's happening with these locations. And I don't know. I've talked to people that I know that work there, and they don't seem to have anticipated this or no. It's just a string of more cost cutting and more layoffs. It last I heard was all the way into maybe middle of June. So I think these are just rolling layoffs that they're figuring out and trying to right size the company. And Elon did this when he took over X, and it's something that he seems to have a pattern of doing. And he's even done it where he's brought in like SpaceX engineers to go in when he didn't like something, and he's laid off departments and had them come in and contribute. And it's definitely an Elon move. We'll see how it impacts, but everything trickles down. We know that also with Ford that a lot of the people that are waiting on adapters have received emails. Not that these are related at all, the layoffs versus the adapters. I'm sure that's a supply chain constraint, but to the point, Josh, of opportunity. When all of Tesla's adapters distributed by Ford and Rivian start taking a long time, and then they get a month-long delay. That's where, just talked to the CEO of A to Z recently. They're shipping 2 to 3 weeks after ordering. So for folks that are waiting, for months and then just got an email that says it's going to be a month even further, it's an opportunity for players like A to Z who've been prepared, as opposed to Electron, right? Who just our friend of the show, Brandon Flash, who was on and did a great video about the Electron adapter. That thing rippled to the point that they've done a recall on all the Electron adapters. And so, right, it is about being positioned and taking advantage of the opportunity, because now you've got A to Z where you've got Electron being recalled. Shout out Brandon Flash for that. And then Tesla, who for whether it's supply chain, manufacturing, whatever, they're delayed, which ripples to Rivian and Ford. A to Z is positioned to now take advantage of that and do well. Who is going to do that in the charging space? Got to get out there and get those bids in for Power Up America and start getting some building going. And it'll be interesting to see in the long term who shakes out and what that looks like for sure.
Absolutely. Yeah.
That
And
recall, that recall was shocking, but not really. And it could have been shocking for other people too.
It could have been shocking. Absolutely. Hey, we got a guest on the show. Who's back there?
Oh, he's hiding. That's one of the
Nice.
two that we're getting today. So he
Very
said he
cool.
doesn't exist.
there was this week. I don't know if you guys saw that as well, but yesterday I think Tesla did another round of layoffs again.
Yep.
I mean, it's not related to the supercharge team because they're already gone, but I think that there was software engineering,
service folks,
Yeah.
and battery and powertrain folks. In fact, I've got somebody that works for me that also works for Tesla, and he's supposed to find out in a week whether or not his organization is. Some of them are going to get relocated. Some of them are going to get laid off. He doesn't know yet until sometime next week. And I've told him, look, he's part-time for me. And I've let him know that I'll get you full-time hours if you get laid off there. So I've got a few people inside that have been talking, whispering to me here and there, but nothing I can share. And none of them know. It's not like anything was planned. This is all stuff that is just, every time it happens is kind of news to them. Now,
I
this
mean,
one
they have
person,
150,000 or something like that of a workforce.
Yeah.
They're going to end up laying off 15,000 people. And
Yep.
so, I mean, the supercharge team of 500 is a drop in the bucket compared to the waves that are coming. But I think it's been about 4 weeks in a row now that there's been rounds of layoffs, and I don't think it's going to stop anytime soon. I think it's going to continue to roll out around the recent news. So
recruiters for some of the first people that I knew that messaged me, because you don't need recruiters if you're laying people off. So a bunch of recruiters went, public policy people, supercharger people, service center people. And then you saw with service center, a bunch of appointments got delayed. And then, it'll be interesting, man. Look, can't doubt Elon's intelligence. He's has not failed yet. I don't think he's going to fail here. I just wish he'd approach it differently. That's not the way I would ever want to be a leader, but I'm not a multi-billionaire with hundreds of thousands of people under my responsibility and almost $1 trillion worth of product. And So look, I can't.
He's
judge a
gotten to
man
where
that's-
he's at for a reason, and we
Yep.
can question him all day long, but at the end of the day, he's the trillionaire, not us. So.
Yep. That's
Well,
right, man.
That makes it a lot easier for us to go ask him and have him on to discuss the decisions and
Yeah.
see if we can get that
Episode
done.
1, we
So,
did talk about having Elon on the show, and it still's not happened yet. So we need
Open
to
invite.
Yeah, open invite. Elon, come to
Awesome.
explain to us your brain. So there you go. Well, that's good. That's good. Good intel for Ford. It's good to kind of dive into that and have a discussion. I mean, I think there's just a lot of, like I said, FUD just that goes around just the generalized investing decisions of a business that people just make assumptions on, and it's just
Yeah.
poor and lack of intelligence, but something that hopefully that's educational to somebody that's listening. And we'll continue to spotlight those things as we determine. So that will be a wrap on today's episode. More information coming soon, including potential information on a Cybertruck acquisition coming soon.
Dun dun dun.
Dun dun dun. All right. Well, thanks for tuning in this week. Tune in next week for more EV news and updates.
See you next time.
thank you all.
Thanks for tuning in to Turn Down for What. Tune in next week for more EV news and updates. See you then.